We start off with the markets. Stocks are rallying today on the hope of the deal. A proposed border agreement and progress on trade talks sending the Dow soaring more than 370 points. The S&P closing above its 200-day moving average for the first time since right before that big December sell-off. So let's get straight to Eamon Javers for the very latest on all the deal talks. Eamon.
Yeah, hi, Melissa. The President of the United States said two seemingly contradictory things during a cabinet meeting today. On the one hand, he said he doesn't like the Shutdown deal that's coming together up on Capitol Hill. He says this is a Democratic deal. It's bad for the country. On the other hand, he said he doesn't think there's going to be a shutdown of the government at the end of the week. So the question is, how can we have a shutdown avoidance while not embracing this Shutdown deal? Here's what the President said earlier today.
It's always nice to negotiate a little bit, right? So, whatever you get. But I would hope that there won't be a shutdown. I am extremely unhappy with what the Democrats have given us. It's sad. It's sad. They're doing the country no favor. They are hurting our country very badly. But we certainly don't want to see a shutdown.
So the president there saying he's extremely unhappy with the deal at hand, but on the other hand, he doesn't want to see a government shutdown. So where does that leave us? Maybe the president's carving out some political space in which he could ultimately sign this deal while still denouncing it as a bad deal and looking for additional funding elsewhere in the federal government to continue to build the wall on the southern border. It won't get him everything he wants, but it might get him just enough of a face-saving opportunity to sign this deal and avoid another disastrous government shutdown, which a lot of Republicans on Capitol Hill are urging him not to do. And then the other area where the president today was seeking some wiggle room is in the China negotiations. The president said today that the March 1st deadline for those trade negotiations that are going on in Beijing this week, that is a hard deadline, he said. But he also said that if he gets close to that March 1st deadline, things are looking good. He might let that slide a little bit. So the question is here, what does good look like to the president, and on what terms would he let that March 1st trade deadline slip? He's hinting that it's certainly a possibility anyway, so that gives him a little bit more wiggle room on that negotiation as well, Melissa.
The willingness to be flexible, though, on that March 1st deadline, Eamon, is a positive thing. In terms of finding the money elsewhere in the government for building a wall, what was put forth, I believe, was $1.37 billion.
Right.
Where would one find $4.5 billion or so that's not approved by Congress to build a wall?
Well, the federal government is huge, but that's more than you can find, in the cushions of the couch, right? So the question is, what do you do? My understanding is that they've been looking at this very carefully going back to the summer, and they do have a sense that they can reprogram some federal funds toward building walls, and they have a sense that there are tranches of money that they can do that with that'll provoke a certain tranche that would provoke a little bit of resistance, another tranche that might provoke more resistance, and then a third tranche where they feel like they might face some lawsuits if they tried to repurpose that for wall funding. So the question is, how much of that first tranche can they take, and how many dollars are really there? That's a question I don't know the answer to, but they've been scrubbing the books hard looking for money that they can move around here in the federal budget.
All right, Eamon, thank you. Eamon Javers at the White House. Well, today it was the cyclical sectors, materials, financials, industrials, all seeing the biggest gains. These are the groups that have helped lead us off the market lows. Will they drive us back to new highs, Guy?
Well, these economically sensitive, the cyclical names that we talk about all the time, will they drive us? Well, the hope is they will. But I'll tell you, I don't think that's what's going on now. Last night when the S&P closed at 2710, I started the show by saying I think we roll over from here. Clearly, that's wrong, as now we're some 35 points higher. I think this is actually a level that Steve's talked about. But I'll say this, although Citibank has rallied literally 30% over the last month and a half, and all these banks' names have done extraordinarily well, most of them, with the exception of J.P. Morgan, are in a pretty defined downtrend from the beginning of 2018. And I think what we're seeing is what, like we've seen before, we're seeing a bounce off an oversold condition. Banks specifically, like Citi, continue to make lower lows and lower highs. And I think that's what we're seeing now. So again, I've been wrong directionally with the broader market, but if you're looking for the banks to take us out, I think this is where actually they start to roll over.
In terms of the action that we saw today, Grasso, in terms of the action in the cyclicals, does this tell you that this is China trade hopes?
It's China trade on industrials. China trade on materials.
So what's Shutdown? Is there anything in that rally?
So I think they're both within the rally, but I do think we're ready to roll over. Industrials can reach a little further, but I think the other two are ready to roll almost immediately.
Go ahead. Oh, I thought you.
Go ahead, Karen. Come on, ladies first, please.
All right.
Please, that's how I roll. You know, I think the rally today, for me, it's much more about trade. I think if we don't come to if we don't avoid a shutdown, we have to avoid a shutdown, right? So I think that's sort of the easy money. It should have been in there already. To me, it's all about China. I think that a delay from March 1st is somewhat baked in already. I mean, here we are, you know, February 13th. We don't have enough time to come to a deal. Right. So I think the assumption is already baked in that by March 1st, we'll see some sort of, OK, there's progress. And so let's continue to negotiate. If we don't get that, I think that will be really bad. So but I do agree with Steve that the industrials still have more to run if that China trade continues in a positive moment.
If we keep running, though, into a potential trade deal, what happens when we actually get a deal?
Right. Well, I think we have a little room to run even after the deal before we are confronted with a couple of dynamics. But I agree with Karen. I mean, the art of the deal is that there's some kind of a deal. And I think that's the presumption. The things that I get most encouraged about a day like today and just the last bit of this trade for the entire market is that high yield and credit continues to improve. So if you think about what really took the market down into December, it was that the markets on the credit side began to seize up. And we saw something that we hadn't seen. We'd had volatility effectively from February all the way through to October without a deterioration credit. That continues to improve. If you look at the V shape, actually, the industrials have actually gone V plus, and they're probably 4% above kind of where they started this mess. So they are correcting at least better to a better place. And arguably, if you think about the things that are moving the market, I do agree that we have a dynamic where the Fed off the table is something that gives people reason to not really scream for the worst. I think the bottom line is we know earnings are getting weaker. We know the market is probably reasonably priced. But without the Fed being onerous,
what happens if they're not off the table? So this has been the pushback that I'm keeping in the back of my mind. What happens if they do raise? That would upset the market. And I do think the way you pose that question, what happens after the China deal? I think that the market, that's the biggest sell the news event in my mind, right there. It can never live up to what we expect.
I think if there is a China deal, what happens after the China deal is then there's a new negotiation with Europe. They're our now second biggest trade partner. And is there some grand deal to be done with Europe and are tariffs imposed there? So I think we go from one side of the globe to the other. And don't underestimate, I think one of the headlines today was bipartisan group in Congress found no collusion between the Trump administration and Russia. I think that was part of this as well. So maybe it takes some of this Mueller investigation off the table. I don't know if that's the case. It just seems that was part of it as well. Again, I'll say the banks have traded extraordinarily well. And I didn't think from 2,500 we'd get to where we are now. But I do think you're starting to see, again, some levels where it would make sense to take profits specifically in these banks.
Where does positioning, how does that play into it? I just read a Bank of America Merrill Lynch survey of fund managers with $515 billion under management, and most of them preferred cash over equities. The allocation to global equities is at the lowest since September 2016, and yet here we are in the markets.
Wait, let me just ask you, clarify something for me. When you say prefer cash over equities, that's on the margin, or they would have a bigger allocation of cash than they would to equities? That would be kind of
I don't think that it's a bigger allocation to cash.
So it's sort of on the margin, a higher
cash allocation
than they've had in the past.
Well, my view on that is I think positioning is everything. I think where we were positioned, where greed and fear was at the end of December, we've kind of spouted these numbers over the last few weeks, but we're at a place where at least bears are kind of at a low going all the way back to June. Bulls have certainly reasserted themselves. And to be clear also on the government shutdown, because I forgot to mention this earlier, if you think we rallied today on a possible deal, how about the month of January where we had no government in place and we had the best January in history? So do not delude yourself into thinking that this is actually a dynamic. It is China, and I do think positioning is everything, which is why people should be a little nervous right now.
But why are they sitting on cash? I think your point is, how are they sitting on cash?
Why are they so cautious? What are they waiting for at this point?
That number took me off.
Could that be the next?
It could definitely be. I think that it's been positioned.
Right, exactly.
It's been
after
positioned.
the China deal. You've got all this money supposedly on the sideline.
I think the pain trades to the upside.
To the point of the oversold, though, once you get bit by that overselling of the macro market, you kind of sit on your hands. And they've watched the market rally tremendously in January, and they're still sitting on their hands. So I think they're looking through saying, what do we have to look forward to? It's not going to be earnings.